We're back.
We're back.
We're back in the studio.
I'm excited to be back.
Long Memorial Day weekend.
It's only been like 3 days.
It's only been like 3 days. We've actually been cranking these things out.
That's true.
We've got the guys from Decimine Group with us on the pod today. Roshan, Henry, what's going on, guys?
Hey, how you doing?
Doing good, doing good. What's going on with you guys? You guys out here mining or what?
And where are you guys at right now? Roshan, where are you
Yeah,
at?
because you're on two different locations. For those who are watching.
Yeah, we're at two different locations, but probably 15 minutes away, 20 minutes away from each other. So we're in northern New Jersey, maybe 35 minutes outside the city.
Oh,
Okay.
okay. How's the weather? Because it's freaking miserably hot here already.
It
was brutal
it is.
yesterday.
It is spectacular.
Is it?
Spectacular outside. Went for a morning swim, got a great workout to start the day.
This guy humble bragging out here right now.
So you guys both from the Jersey area?
Yeah, I'm born and raised in Jersey. Lived in Boston for a while for undergrad and from business school. Spent a little time in London, but yeah, New Jersey's home.
So you're a Boston guy. That explains your Tatum fandom we were talking about a little bit before the show. So you're going for the Celtics. I'm imagining.
I'm definitely going.
Yeah.
I love Kyrie and I love Luka, but definitely going for the Celtics. I've always, I wouldn't call myself a Celtics fan, but I'd say Tatum's my favorite player in the league.
Yeah, that's understandable. And like I said, he's a Missouri boy, so I mean. That explains a lot of his abilities, skill, and knowledge of the game. Like something about Missouri guys in basketball, we just know it, you know.
Being trained by Kobe also helps.
Being trained by Kobe helps. It does help. It does help. And Henry, what's your story? You a basketball guy too?
Oh no, not really. I'm boring. I'm not really into most sports.
Henry, I'm right there with you, man. I don't know shit about basketball, dude.
Yeah, like.
Other things. You're more into Bitcoin.
I'm more into Bitcoin, yeah.
That's all right. Bitcoin and basketball. I need to make that a website. Bitcoin and basketball.
That's a good idea.
Yeah.
Yeah, I mean, it's kind of the right hue of orange already, right? A standard basketball.
Yeah, there
Just put a B on it.
Yeah, it works. I'm going to get a Bitcoin basketball now, actually. We'll put that right behind us next time. All right, well, tell us about Decimine and what you guys got going on. And we do usually ask kind of guys' stories and how they got into the space and because it is, obviously still we're early stages, relatively new industry, and kind of what's your backgrounds and where'd you come from and how'd you get here, and how'd y'all meet?
Yeah, absolutely. So I'll kick us off. So my background is primarily with commercial real estate brokerage. That was the first 22 years of my professional career. And I still have a commercial real estate brokerage business. I also have a real estate investment firm that's quite active, predominantly right now down in the Carolinas. Beyond that, I have I co-own an aesthetics and wellness, a health and wellness business that's rapidly scaling. And then the Bitcoin mining business that I got into back in 2016. So how we met is I had at my primary residence, I had there was an ice storm that caused some pretty significant landscaping damage, and Henry's family, who has an insurance brokerage business, insured the home. And when I reached out to his dad to say I need to file a claim, he sent Henry over just to make sure I didn't say anything stupid to the insurance adjuster. And so Henry got there early, and we started speaking. And I asked him, what else do you do? And he said, I'm in crypto. And I'm like, well, what does that mean? and he mentioned that he's got an Ethereum, a GPU mining farm. So after the insurance adjuster left, I pretty much canceled the rest of my day, went over to Henry's home, and saw that he had built out this mini data center at his place, and I was blown away. I mean, it was super cool. And then as I got to learn about the economics of it, I was even more interested. And that was now 2016, and that's how we met and how we came together.
Henry, were you just mining at the house?
I was, yeah. In the beginning, I was just mining at the house. So, way back then, there was almost no competition on any chain in terms of difficulty. So even with my after delivery, I think I was paying 18.5 cents.
That was going to be my question. What was your electricity cost? Yeah.
Yeah. And the margins were still gigantic, right? And so I was just, I was a young entrepreneur at the time. I met Roshan. I was helping out at my family's insurance business. I'd worked at a few startups. I was doing some real estate investing, some equities and options trading, kind of looking for just different ways to kind of build value, build wealth. So I came across Ethereum mining, and this GPU that can make $2 or $3 a day back then, only costing $200. Right? You put that in an Excel spreadsheet, and right, I mean, it's nothing is like that. And I think that is probably the most rookie mistake a miner can make, is to say, look at this revenue I'm getting from mining today. I should expect that forever.
Right.
But luckily that was way before prices went crazy. So by the time Roshan and I met, I had maybe 300 GPUs in my garage. I had taken a saw and with a power saw, I cut a hole in the side of my house, and I put a kitchen exhaust fan in it to vent the heat. I had that on like a Raspberry Pi with a thermometer to just keep like a homeostasis of temperature in there. It was a wild time. It was, in some ways, it was much more fun than mining is now, because even to keep those things stable, to keep a few hundred GPUs running on risers in a garage on open motherboards was a hassle. But and all the little tricks of optimization that were mandatory right back then. I mean, you couldn't mine if you didn't do things very, very particularly and right in that age, at least effectively. And I think that kind of methodology translated very well into what Decimal's become.
Well, I got two quick questions.
So fast. Yeah, go ahead.
What did your neighbors think when they see you cutting holes in your house, and they're like, "What the hell is going on with this dude? He's weird. We need to maybe call Homeland Security or something." And then, what did the electricity company say? Because you guys had to be using significant amount of power, I'd imagine, for a residential
I maxed out my panel. That's right. Yeah. I was always a little worried that the police would kick down my door, thinking I had some kind of like a marijuana farm.
Right. That's what I was wondering too. Is like, that's got to be what they were thinking.
Well, that was on the other side of the house, the growing operation.
Yeah. Oh man. But I never got any issue with the power company, because it's not like I maxed out the transformer for my block. I kept within my panel. And my neighbors were, because it was just, so much value of hardware, I tried to kind of keep it incognito. Like I papered over the windows of the garage, and I put like blackouts around the intake fan so that you couldn't see all the humming lights and such. But yeah, I mean, people thought it was interesting.
Yeah.
I remember my mailman was actually really excited about it when he came once, when I had the garage door open. We talked about it for an hour or something like that. Just he was really interested. But yeah, back then, I mean, now I think more people know about this, and especially with the rise of compute data, it's not an uncommon thing for someone to know what a GPU farm is, but they didn't really exist back then.
That's cool, man.
So it was a cool, novel thing.
Yeah, that's super cool.
We won't hold the Ethereum mining against you.
Yeah.
How did you make your way to Bitcoin early on, or was this a much later revelation?
Well, Bitcoin as an asset, back then, I was very much into Bitcoin as an asset, and it was really just that the economics of Ethereum mining were better, and really the feasibility of it. I mean, if I put an S9 in my garage, then you max out your panel pretty quickly. But a GPU that ran at 80 watts, 90 watts, I could pack a lot of them in.
Yeah.
And then Bitcoin mining, though, we really did that pivot with Decimal in 2021, I'd say. And the reason for that, and this wasn't quite in 2021, it was really, let's say the later months of 2021, looking at the Ethereum Foundation, the Ethereum developer community, their list of priorities, they were very public about that, right? They said that, here's our roadmap, here's what we're working on, here's what we want to do. And over and over and over, we saw priorities get moved from before the merge to after the merge. And to us, we said that it was a signal that the developer community was rushing towards, or not rushing, but trying to make that merge happen, that switch from proof of work to proof of stake for Ethereum as soon as possible. And to us, that was the writing on the wall. So when GPU mining was really at the height of profitability is when we said, okay, we're not buying any GPUs. We sold all of our GPUs and we pivoted to Bitcoin mining. Because we felt that had the longevity.
Do you guys have kind of a similar philosophy? Because I've been thinking about this a lot lately, mainly because I'm working with several groups, but they're trying to really focus on getting deployed as soon as possible right now, which I agree with. But kind of playing the actual cycle game a lot, because that's kind of what you were talking about with switching from Ethereum to mining Bitcoin. And I think if you're not a public miner with access to a lot of capital from the public markets, obviously, if you're private, do you guys try to focus on the cycles in Bitcoin more and kind of buying up at a less profitable time like we're in right now, deploying, and then kind of when we hit these peaks, that's when a lot of people pour in, but do you guys try to pull the reins back and kind of be more strategic on the capital deployment at that point?
So mining profitability and the cost of the hardware are not necessarily in lockstep, right? There's other factors there. So what we've seen, let's say pre-halving for this year, from January to April 19th when the halving occurred, we saw mining profitability run up and up and up, and we saw hardware prices keep coming down, right? The reason for that is the availability of chips. Right? Back in 2021, when ASICs were selling for $14,000, $15,000 each, that wasn't because everyone said, oh, this is a good way to invest in Bitcoin. It's because of the scarcity of them was so high, because there were no chips available. We had all of the car companies buying all of them, all the cell phone companies buying all of them, and not enough being made at the foundries. And I think for Bitcoin miners deploying now, that's the cycle that we have to pay attention to, is the capacity of wafers at TSMC. How much of those are going to Bitcoin mining companies, and what kind of network capacity we can have going forward. And then, of course, that has to be matched up against the current state of the network today. So we're in a completely different paradigm than we've ever been in before, because there are 5 million S19 generation rigs out there that are mining at, maybe 10% profit margins. And the incremental replacement of those will be a very different story than let's say the prior cycle, when we went from in the 50s, 60s, or even higher, 80s, 90s, hundreds of efficiency watts per terahash down to 30, right? That's what happened last cycle. This cycle, we're going from 30 to 15 at the best.
Wow.
Really more like 18, 19, right?
Yeah.
So I think that it's not, not to use a truism, but right, like history doesn't repeat itself, but it rhymes,
Yeah, that's interesting. So right now, what does how much of the chips, what's the surplus look like, or how much is going to Bitcoin miners now compared to them? Is there a lot more availability?
So of the 3 nanometer, 4 nanometer chipset, let's say S21s and M63S++, right? The best of the best, right? We're talking the highest efficiency stuff. Those are shipping out. I mean, the S21 started shipping in January, or started arriving in January, roughly in bulk, let's say. There might be 250,000 of them out there, compared to 20 times as many rigs from the prior generation still mining. So we have a long way to go. If it's taken 6 months to get to 250,000 of those machines, and I'm only counting Bitmain here, so there's more from the other providers. We have Oridine coming in with the incremental, right? But they're not going to really change the network hash rate, right? It's going to take a long time. For a block is another one, right? They're not going to change the hash rate for a while. So if it's, let's say that's 250. So at the current rates of orders, we're looking at 2 to 3 years, right, before most of the network is replaced by these higher, let's say 17, 18 or better efficiency machines. So that's the kind of planning that, or let's say that kind of outlook is what miners have to plan for as they build their business. Because if Bitcoin mining is it's a U.S. dollar denominated levered play on Bitcoin, right? What you're trying to do is trying to give U.S. dollars for a machine, and this machine, if you could have bought one Bitcoin with those U.S. dollars, this machine is giving you 1.1, right? You're arbing it because of the cost of production and so on. So if if that's your plan coming into this market, just like an option, if it falls below your strike, you don't make anything.
Right.
And that's what's happening to older hardware. We can kind of think of their cost of production as their strike price for that option. So for this whole long-winded thing to come to the final point, decimals, we've deployed 2,500 or so of those brand new S21s this year already. And we plan to keep just rolling them out. We're coming in at a cost of production at about half of the average miner. So from a competitive perspective, we don't really care what happens. We're almost agnostic to the outcomes of the cycle. And, like an options position, if you can keep it, if you can maintain it, if it stays in the money, if you trim it, roll it, add to it, and then eventually that big pop happens that you're aiming for, you get all that value. So that's kind of the business strategy of a thoughtful miner is, number one, most important thing, I need to be able to survive in any environment. And number two, the reason for it is because when we get to the next kind of, let's say, parabolic increase in either Bitcoin price or through another wave of adoption that increases transaction fees from usage, then you get all that value, you capture it. So we're kind of sitting here with our nets in the water, waiting for the fish to come down, and we're just making sure that we're building the strongest, safest nets with the most longevity we can.
What are you guys doing differently to bring your cost of production down to half of an average miner?
Well, deploying capital is this is a very capital intensive business. Refreshing your fleet at the right time is very important. I mean, something that we were talking about earlier today is that back when things were at their worst, when Bitcoin was down at 19,000, we sold everything that we had that was 30 or really 29, let's say, watts a terahash or worse. And we bought more efficient hardware. We swapped every single piece. And we did it then for two reasons. One was because all the hardware was dirt cheap, right? Capitulation prices, bankruptcy prices. So the swap was pretty much 1-to-1. We got more efficient hardware for the same price we sold our old stuff for, because things were so depressed. And then the other piece is that when U.S. dollar revenues were so low is when we ate the downtime. Whereas let's say if Bitcoin went to $200,000 tomorrow, it would be terrible timing to be swapping your fleet, right? You got to position beforehand.
That's what I was getting at, though. Really, is kind of targeting when you're deploying that capital into the machines. Like now is probably, at least I feel like, I don't want to buy stuff when it's ripping, And I think there was that last cycle, we saw so many people just trying to buy more machines because you'd look at the market caps and these mining stocks were completely overblown, and a lot of it was based on literally that you go put a big machine order in, and you see your stock go up, and I'm like, well, they don't have it plugged in, and they're not generating any production. It's an expenditure right now, and you're buying at the top of the market. So I agree.
It became a thing for a while. It's just it still is kind of a thing. Hey, we massive order of ASICs, massive order of ASICs.
Right, and I think that's went away some, and maybe Ro, you can speak to that, but I don't think that's going to be as moving for the market for the public guys going forward. But I don't know. I mean, I'm a lawyer, kind of an ops guy, so I don't I'm not a public markets finance guru, but I just don't think there's going to be that same correlation like there was last time. Is that aligned with your guys' thesis or no?
Yeah, I mean, I don't want to speak ill of anyone in the industry. We're all working on this together, but I think a public mining company is kind of intrinsically doesn't make sense from a financial perspective. Why would I pay a multiple for a mining rig? If I go to a public miner and let's say that they have $1 billion of assets. Why? I don't think that their market cap deserves to be $8 billion or $5 billion, whatever it is, right? I think that the dilutive effect of investing in a multiplied or a company with a multiple that owns Bitcoin mining hardware defeats the purpose of the investment. Because if your goal is to buy that mining rig to get more Bitcoin than you would have if you bought Bitcoin, and you buy a public miner, even if they're at a 3 multiple, you've reduced your impact by a third. There's no way that you're going to get a better exposure to Bitcoin there than you will by buying just Bitcoin itself.
Yeah, it's insane.
Yeah, so I would never. I've bought a lot of puts. I've sold a lot of calls on public miners. I think that that's an appropriate way to interact with them. I think that in the end, they're all going to compress in their market caps. There'll be M&A, and it'll really be. Sorry to cut you off there. It'll really be power plants that will be the big public Bitcoin miners, right? Not these companies that build data centers somewhere on the grid. It'll be companies that own huge amounts of generation. Let's say the next cycle.
Is now a good time to disclose that you're shorting pretty much all of them?
I did. I said I'm buying puts and selling calls, right? I mean, like,
I completely agree with you. I completely agree on the. I don't know enough on the public side, but I think we should set up a little debate at some point and have some public mining group or proponents or advocates and some of the private folks. Henry, you can come on and be one of them.
I would love that. They deserve to be able to defend themselves.
I see both sides of it. I see both sides of it, and I'm conflicted because going back to like what you said, I mean, the name of the game is going to be capital deployment, right? And you talk to, I think we've talked to practically every miner that exists at this point, it seems. And it's like the name of the game is always being, like, you're always raising money, right? And so I think the mechanism of being public to have access to the public markets significantly makes your life so much easier from a capital raising perspective, unless you want to constantly be either on the roadshow or you just have access to just massive amounts of capital to be able to fund growth. Not to disagree with anything you said, but I think both of those can be true at the same time.
Yeah.
Oh, that's absolutely true. I mean, very, it's a great position to be in to be able to fill out a form and raise $25 million. I love that. For us, that's a slog. We've gotten it done, but I think the level of scrutiny and compliance and that comes along with being a public miner, and Justin, you probably know this way better than I do. That's also a grind, and that's not something that I think we would want to subject ourselves to. But when we went and raised capital, at least for our primary vehicle, we did it as at a dollars in basis. So basically, no one was paying a multiple for on their investment. I mean, now when we're going to go out and we're going to raise another round at a multiple of what folks had come in for. But right, Henry, I mean, that's part of the reason was we didn't like the way in which the public miners were. I also think that to some degree it comes down to access. I think of the people who are investing in public miners and in speaking to people, just friends of mine, they don't know it's not, the on-ramps are not there. They find it really challenging to just even open up something as basic as a Coinbase account or Crypto.com account and buy Bitcoin. These are the same people who are willing to pay fees to BlackRock and Fidelity for the ETF. And so, it's not as though they've got plenty of options in front of them. Even if they've made the decision that they want to invest in Bitcoin mining, they would have no ability to do that other than going out and buying CleanSpark or, one of the publics.
Yeah. So in their mind, they're looking at it as a way to participate in the Bitcoin market, own Bitcoin through mining stocks. Yeah. Which I agree with you. It seems so easy to us because we've all been in this now for a while, and like it seems like common knowledge, but we're still so freaking early that it's confusing to a lot of people. I mean, Jake will make fun of me because I talk about her all the time, but like Sarah, my fiance, which we're getting married next week, but or I guess the week after, but which you're coming to the reception too, right?
Hopefully.
You better be, bro. But her daughter just graduated from college, and I've I've tried having the conversation with her about kind of Bitcoin. I want to get her into the space because she's very interested in it. But like a 21-year-old who's, obviously probably a lot more technologically advanced and sound compared to me, being an old man, they still don't understand the vast majority of it at all. And so, going and just opening a Fidelity account and buying the ETF or some mining stocks is like the easiest way for them to get exposure to something that they might be interested in, but something that...
How old's Sarah's son?
Her daughter. She's 21.
Her daughter, sorry.
21. She'll be 22.
She's 21. Okay, so I think that to me is pretty telling. I think it's not that generation; it's the generation after.
Right.
And I could even be wrong there because I asked my 15-year-old, my son, are you guys learning about Bitcoin in school, or are your friends talking about crypto or Bitcoin? Are they investing? None of them are.
Really?
But my younger one, my 12-year-old, who Henry has given a little crash course on Bitcoin to and Bitcoin mining, I think it's his generation. I think for them it becomes much more intuitive. I think they're the ones who are actually utilizing Bitcoin and other crypto.
I agree.
And yeah, I think that's when it's we're just not there yet.
Right.
In the same way in which my wife and I are not using TikTok and Snapchat, right?
Yeah.
That's completely foreign to us.
Mm-hmm. I agree. And the thing I talked about this a few years ago with Will Foxley on the deal we were doing, but I have a 12-year-old. He's about to be 13 next week, but he plays Fortnite, and they use V-Bucks. He plays Roblox, and they use whatever they're called, Robux. I don't know what it is. But that is actually a much more common way to transact for them. Like that.
Yep.
Bitcoin, cryptos, whatever. Like that way of transacting with each other is literally how they transact with each other. And
yeah,
that is going to be the way that they do things in the future. It's just going to be. And so I totally agree.
I think my son, for birthday parties that he goes to, he gives skins and V-Bucks to his friend. Yeah,
I totally agree. Taking it back to Decimal in particular, what are you guys, how are you guys funded primarily? Is that something that you can discuss? But you guys private equity or bootstrapped? Yeah, how are you guys obtaining your funding mostly? Are you working with family offices or are you guys?
We've been, we've operated Decimal really under the radar to date. I think that will change now in 2024. It's primarily just been friends and family and mostly inbounds that from people who have heard about how we're doing things and how we've optimize our existing mining operations, the returns that we've put up for our investors. We launched a mining as a service business about a year or so ago. And I think on a net basis, we returned nearly 50% to our investors last year.
Nice.
On that. And that's opened up a bunch of doors. So we've got a couple one large family office that's in and constantly expanding with us. And then a couple other small ones. But we do intend to get out there, not raise any institutional capital, but probably get in front of some more family offices.
Nice. And what are you guys' kind of goals this year? Are you looking for site acquisitions or are you guys looking to host some? And I'm curious to hear what you guys think about the hosting model because, that's another debate.
We've got a couple initiatives that we're up to. So one of the things that I think I wouldn't call it a mistake, but we've been burned pretty badly from hosts, and we've made a decision that we are not willing to take on that counterparty risk any longer. So we're moving completely away from the hosted model. I also think it's really hard to diligence these hosts, as great as they may seem. And we were at bed with one that had $1 billion+ valuation and was bankrupt after a weekend. We're just going out. We're going to acquire and develop our own sites. We're in the process of 2 of those sorts of joint ventures and acquisitions. and really want to be able to control our destiny. I think that we can do it just as well, if not better, than the hosting providers that we've worked with. Obviously, that's a generalization, right? Some of them are fine, but I think our cost of power will be lower. Overall, I think we can just operate it in a much more efficient manner. So that's the first thing that we're doing, and I guess you can call that part of our vertical integration strategy. And we continue to recycle our fleet, buy all newest generation machines. What was the second part of the question? What did I miss, Henry?
Well, kind of like what's your guys' plans going forward was basically the gist.
Oh, right. Sorry. So our goals are to get to 2 exahashes as quickly as possible. And we're small to medium-sized company right now. And then, frankly, the plan is to exit. We would like to sell the company. Not sure who the suitors, who the potential buyers would be, but I do think that once we control the pipeline of power that we have in front of us, and get to that size, I think it's somewhere between 1 to 2 exahashes. I think we'll be able to exit, and then the plan is to rinse and repeat and do it on a much larger and more institutional grade scale from the outset. Well, Henry, let me know feel differently, or if I missed anything out there.
I'll add 2 things to that, because I like the openness too about the exit. I think people can be cagey about it sometimes, but I think it's good. 2 things. The due diligence side, I do know a way, or I would recommend a way to kind of shore up the DD of hosting providers. One suggestion would be call Firm 21M and let us do some DD.
Shameless plug. Shameless.
Give us a shout. We'll go do. We do a lot of DD work. So, but that's one. Yeah, shameless plug in there. But also the other part. Let me know when you guys are ready to sell, because we got a pretty healthy book of clients, and that would be, I think getting to the right size is what people miss in this space a lot. Because I do think there's a lot of people get going, they have an exit in mind, but it's like you're not even attractive until you get to a certain level for real buyers. There's a limited pool of actual groups that are capable capital-wise and from an execution standpoint to actually take down some of these deals. And if you're not at the right scale, it's not going to be appealing. And if you're too big, you limit that pool even further. So I agree, I think there's a sweet spot that you need to target for acquisition, in this space.
Yeah, Justin, we should definitely have that conversation, because the way I envision this, I don't foresee this being a formal process. Mm-hmm. I don't see us engaging like a Cowen or Moelis or one of the mid-market advisory firms to go through a formal process. I think this is going to happen through personal and professional relationships. Mm-hmm. Someone's going to hear about us. When they dig in, they're going to like what they see on what we've done here, and it'll be an off-market transaction that happens. Yeah, but it'd be great to be talking to you about that.
So let's dig into this. And this is a question to all of you, because Justin, you're doing deals all the time. You guys are obviously prepping for an exit. I think this is a great, transparent conversation for anybody else in the mining space. What can you kind of expect in the market today? Because we talked about multiples in the public markets, right? But private markets, you're looking for an exit. What kind of multiple can you expect? Say you guys build to the 2 exahash.
It depends on a lot
How
of
are people
stuff.
valuing companies?
Yeah, so and I'd be interested to hear what you guys think.
Wow.
Yeah, from the infrastructure side, it depends. Like, I think a rack-ready site right now, where you're basically selling the power, you're selling space, a land lease, or a land sale, preferably. Rack-ready, kind of, you just got to go plug your machines in. We've seen sales over the last 6 months, and things change, obviously, especially after the halving. But and then we hit all-time high on the hash rate again too. So I haven't checked what the hash price is, but I'm sure it's not pretty.
53.
It probably is even lower a little bit today. I don't know, but we saw sales anywhere from around $500,000 megawatt for rack ready.
This is no machines?
Yeah, no machines.
Okay.
Right.
Now, if you're selling machines, it's going to depend on what generation they are. It's going to depend heavily on your power price. But that's where you guys are right. Like, the vertical integration and growing that way, you're going to have a lower power price, and you got a better opportunity to be attractive to a large scale miner that's well capitalized and is actually looking to gobble stuff up. So that's kind of the mark, I think, is 500K is like the infrastructure's there, absent the mining machines, but like it's rack ready. They can move in, throw their machines in, and be ready to go. That's kind of the number you work off. It'll be below, maybe some above, depending on certain circumstances for that particular site. But going into it, that's kind of what I've seen. What would you guys think?
I think that's sorry, Henry. That's exactly what I had in mind is 400 to 500.
Mm-hmm. 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 Yeah, same. Yeah, I mean, I think this is kind of one of the big questions, right? How do you value Bitcoin mining? And if I'm a buyer, let's say, take it the opposite of my perspective. Why would I buy a Bitcoin mining company? So I've got time to deployment. I have the deployment risk. I have, the capital costs, the opportunity cost. I have, if I'm a public miner, I have the delta between the private value and what that will add to my market cap. I think those are kind of like the big levers that companies are looking at. So the more bullish the market gets, all of these forces compress expand actually exponentially, right? The time to market premium in, let's say, if Bitcoin were $250,000 each, and not that I'm projecting that, but to say, to give an example, right, to describe this relationship, if Bitcoin were $250,000 each, that time to market premium would be maybe 5 or 6 times what it is now. Public companies, if Bitcoin went to 250K, the public miners would explode in value, and they would be able to make acquisitions at 10 times replacement cost and get a bump in their market cap for it and have it be worth their while. Ideally, that kind of squeezed market is what we would want to sell into. But also we recognize that may never happen, but as we approach it, basically our inclination to sell accelerates, because being a seller becomes becomes a better position under those in that kind of market.
Right. Something else I think too that isn't getting looked at enough is owning a long-term PPA at kind of a locked-in price. And I think with the explosion of AI that we've seen, and that I think is only going to grow bigger and start gobbling up more power, I think access to cheap, reliable, and power that's not having to be curtailed 20% or more a year is going to get more and more and more valuable. And so, that's another factor I think I'd throw in there. And it kind of goes back to what you said, Henry, about the power plants. Because I agree, and that's something we've talked about for a long time, is that ultimately I think utilities and power generation companies, when they get past the whole, what is this and how does it work and it's magic internet money, and once they get past all that crap, they're going to realize how valuable this is for them, and they have unlimited potential with it. And so they could dominate the space in such an easy way. And I mean, they could be using older genset machines and still dominate the space. And so it's like they can go have a lower capital entry cost, and they have cheaper cost of power. They can destroy everybody. So they'll ultimately get into it. They will. It's inevitable. And so I think
they will.
Yeah, I think that I totally agree.
And Justin, that's what I mean when I say rinse and repeat.
Right.
That's kind of Decimal 2.0. Is partnering with one of those guys.
Right. I think that's wise. I do think it's wise. And, I'm at Adicon also, and we have a long-term PPA. And that's one of the things why I wanted to go over there, because I was like, they got a long-term locked-in PPA that has guardrails on our power price. Like that's the kind of place I want to be in this space, because I think that's the thing that is going to, it's going to hurt some of the groups, I think, potentially that are on grid. And because this power prices, I think, are just going to keep going up. I don't.
Yeah, it essentially functions as a hedge.
Right. And so, and there's there's arbitrage opportunities with that, with the volatility. Texas is very unique in the way you can capture that arbitrage on the power markets on a daily basis. But I think other grids or other markets they're finding ways to make opportunities there too. But I think it's tough to beat a locked in power price for a long term. I think that will set you apart.
Right. That site that you and I guess Joe have in Dakota with that long-term PPA, I mean, that's a gold mine.
Yeah, I agree. And that's why when I was looking at different things, I'm like, man, that one's tough to pass up. So I did it. Thank you, Joe. But yeah, so man, this is good. I like this.
We covered a lot of things that we've never talked about before.
Yeah. This has been really nice. So where are most of you guys' operations set up right now, if you don't mind?
Yeah, we've got 2 sites in Ohio. One which we're in the process of getting, or rather gaining co-ownership of, potentially even both sites. We have a site in PA that can grow to about 50 megawatts. It's a small site currently, but some of the infrastructure work is already happening to build that out. We've got another site in upstate New York, 100% hydropower, super low cost of power. It's a hosted site. We have a very small deployment with at Granbury that's now controlled by Marathon. What am I missing? Anything, Henry?
I think we've consolidated out of the others. We've been in a few other spots, but that's it now. Yeah.
Well, let me know when you're looking to get some other ones. We got some teed up. 5 megawatts, 10 megawatts. Yeah, we've got some good ones lined up.
We are looking, so we should definitely have that conversation.
All right.
We're looking for sites, and that 5 to 10 megawatt that you spoke of, that smaller kind of 5 to 20 is right in our wheelhouse. We're not too keen to take down a massive site. That's not us.
Well, then we should definitely talk, man. Let's get. Yeah, because in fact, I just got back from West Texas last week, and I looked at 4 or 5 different ones that we got locked up now. So, yeah, we should chat. Just making deals today. I like it.
Let's do it.
Awesome, guys.
Henry, maybe we can talk about what else, some of the other stuff, the creative stuff that you're doing more on the Hashrate Derivatives side, and some of the work that you've been doing just to kind of create some optionality with Decimale's treasury.
Oh, boy. Okay. Yeah. Sure. So I think one of the biggest differences between Bitcoin and all the other commodities of the world is that when the price goes up, it doesn't increase the rate of supply, right? If gold went to $10,000 tomorrow, a whole ton of new gold mines would open. It's sitting there waiting. They're just not pulling it out because it's too expensive. Same thing with oil, same thing with every commodity. When Bitcoin price rockets, you can't get more of it, right? So as a commodity producer of Bitcoin, we have to have the same kind of risk management tools as all the other commodity producers, but we have also a very different kind of dynamic with what we're making. So, if you asked any sugar farm, oil company, any gold mine, anybody, right? Anyone who orange juice, right? An orange grove, any of them, if they just produce their asset and then sell it day by day, every single one of them says, no way, that's crazy. I would go out of business every season, right? No, everyone sells their production ahead of time. Every single oil company, every single commodity producer. And in Bitcoin mining, it's almost nobody, right? Almost nobody is doing not even 100-year-old. I mean, how old are forward sale contracts of commodities? 1,000 years old, right? I mean, as soon as shipping started between humans, these kind of agreements came up because we need them. Right? We don't know what the price of an asset will be from when we produce it to when we can sell it, and that volatility destroys a business. So anyway, what we've been doing at Decimale, and Luxor has led the charge with creating a safe and well managed and defined marketplace for this, is trading Hashrate Derivatives. We're buying and selling future Bitcoin mining computing power on a levered basis to augment our treasury. exactly the same way that an oil company would be writing calls and puts and buying and selling options on the underlying, right, on the oil. So the alpha we've generated. So we were doing an analysis of our treasury, right, and this is a low risk strategy, right? We're not taking crazy bets here. It's really designed to protect the principal. If we had just sold on the first of every month, looking back for the last year, compared to what we actually did, we made about 25% more US dollars on our Bitcoin yield compared to just sell on the first strategy, a dollar cost average strategy. And it's to do it over a year, I think, to beat the market on average every single day. It's as if we sell at the high price every single day at Decimal. That's that consistent performance means that we're doing something right. And I think that there's also in a different, let's say, a different vertical, a different company, right, where this kind of risk is acceptable. This is more just kind of like a personal hobby for me. I've been trading it naked. So instead of using them as hedging products and as revenue enhancement products for a treasury, I've been buying and selling them just as swaps based on our outlook on Bitcoin price, on difficulty, on transaction fees through the way the market unfolds, and in that effort, I'm at triple digit annualized returns.
Oh wow! Can you manage some money for me?
I get asked that a lot. I think that to understand the mining, like the difficulty, right? The way that it ebbs and flows, and why it grows and why it shrinks, and its relationship with price is a multi-tiered differential equation. It's very, very difficult to have any kind of certainty. And, it takes a huge amount of experience in the mining industry to be able to look at it and say, it's going this way or that way, or to know where the inflection points are, where the pain points are. So, Bitcoin mining experts, Bitcoin mining companies, right? Companies that have exposure to Bitcoin mining need to take appropriate treasury measures, right? We're, largely we're a bunch of tech people who are getting into finance by accident, right? And we need to get the same kind of, and I think this is more, let's say, the industry maturity. We need to get the same kind of financial and treasury risk controls to be ubiquitous across all of us before we're a mature industry. One little season, right? 1 year of volatility bankrupted how many miners?
Right.
Billions of dollars, $5-6 billion of miners. If everybody had appropriate hedges that all the other commodity businesses have, that wouldn't have happened. We wouldn't have lost billions of dollars of businesses in the last 2 years.
Yeah, we've talked about that a lot.
The same thing happened in oil and gas the last two downturns too.
Right. But yeah, well, where do you think hash rate's going right now? I know we hit another all-time high, but what kind of growth you think? And this is obviously, I know it's tough, but you sound very like you've done this for a while, so you probably got a better handle on expectations than most. But what kind of? I try to always forecast. Like typically, I'm putting like a 1.5% increase every adjustment period just to play it safe. But where would you say, like, once we look back at 2024, what kind of hash rate growth do you think we'll have?
Sure. Okay. Yeah. So, I think that method, it depends. Okay. So that 1.5% growth every time, booking that in is the appropriate way to plan your risk out, right? You're going to say, I'm just going to assume that it's going to keep getting divided.
Right.
And that's the way I'm gonna do my cash flow planning. But what are the forces we're looking at? So we have the summer coming. We have a lot of natural gas in depots, but not a lot of production online. Of the production it is online, a good amount of it is pre-sold. We've seen, on just the anticipation of a demand spike, we've seen natural gas rally 60, 70, 80% or something, right? It was down to 170 and then it went up to almost 350, I don't remember. So energy costs are highly correlated with natural gas and also correlated with heat because everyone turning on their AC, right? So I think that in the United States, we'll see a good amount of pain across a large amount of mining this summer from, let's say, July to August. a headwind to that is that we do have probably 25, 30 exahashes of new hardware, getting deployed every month. The counterbalance to that is that there's a great amount of old hardware that's inefficient that's getting turned off. But the reason it gets turned off, I think that there's tiers, right? There's like a stack of capitulation. And at the top, we start with companies that have to turn off because their power is more expensive than what they're making. The next step below that, maybe their rigs are mining profitably, but their ops is unprofitable. Next step below that is maybe their rigs and their ops are profitable, but their debt servicing is unprofitable, and so on down the tiers, right? And then these groups will capitulate in different ways. They'll capitulate over different time frames. And I think something you mentioned earlier about a site with 80% uptime, right? Let's drop that. Let's say that a site has 60%, 70% uptime. But what that gets you is 1 to 2 cent cost power if you're off peak. So you completely ignore from 6 a.m. to 6 p.m. and then you run 12 hours a day, let's say. Sorry. And during those 12 hours a day, your S19 is still profitable. I think a good amount of hash rate will migrate to those kind of situations, and it'll take time to get there. So there are a lot of reasons why hash rate should stay online. And then that last piece is what we talked about is energy generation companies who have energy that's just blowing in the wind. Their number, the huge what you said about older hardware being cheap and this being a very inexpensive time for them to acquire hash rate at their very, very low cost of energy. I think that is going to happen, whether it's through JVs, right, through the power plants, getting a little scrappy and figuring out this themselves, or people approaching them and saying, hey, let me rent your land and buy your power for plus 20%, something like that, right? All of that is going to happen.
Right.
To give more like, I think I've given more of my thoughts on it than a particular position, but, I think net we see growth in the year. And we see a soft summer. And the last caveat is Bitcoin price and transaction fee volume drive all of this. If new protocols launch in the Bitcoin network and it, suddenly overnight steals all the DeFi market share from Bitcoin because suddenly we can run it all, from Ethereum, because suddenly we can run it all on Bitcoin, and Bitcoin transaction fees explode. Right. Then this analysis is out the window. Right. Then we see big hash rate growth. Same thing if we see Bitcoin go to 100, 200, or anywhere, anything in the six figures, any kind of softness out the window, we see big hash rate growth because it'll save those dead firms I talked about before. Right. The ones that are mining unprofitably, the ones that can't pay their COGS, and the ones that can't pay their debt.
This has been very thorough.
It's extremely thorough.
I like it. Good job, guys.
Thank you.
Very good. We need to talk some more.
Yeah, Justin, let's meet up.
Yeah.
Let's try to meet up sometime in June, maybe in person.
Yeah, well, person will be tough. I'm in Canada. Then I'm Greece. We're going to Greece for the honeymoon. I'm excited, man. It's gonna be a good June.
Will you guys be in Nashville?
I will. Yep. We'll be in Nashville. And I'm going to be in Austin the next couple of days. Consensus is over there, so I'm meeting with our boy Will Foxley.
Oh yeah,
him a little bit. But
Henry mentioned to me today that he's thinking about going to Nashville, so maybe we'll both head there, and maybe we could grab a dinner or something,
let's do that.
Time to meet.
I'm going to be there probably all week. I'll be there for probably at least a week. So let's definitely do that.
Awesome,
I'm trying to get Jake to come out there too, man.
We'll see. I love Nashville.
Oh, Nashville's
regardless of whether Bitcoin's. What was that?
Where are you based?
We're both here in Houston.
Yeah.
You're both there. Okay. Yeah.
Yeah, I'm gonna bring him with me. He's coming.
Okay.
He'll be there. It'll be good. Well, thank you guys.
Maybe you and we'll grab Mario and the five.
Absolutely. Anytime we can. Me, Mario, and Jake, we're boys.
We can't not have a good time.
No, that'll be a good time.
It's a guaranteed good time every time. Guys, this has been great. We're going to have to do this again. Once you guys get closer to the exit, maybe after the exit, see how everything played out and see how Decimal 2.0 is gearing up. So thanks again, and we'll talk to you guys soon.
Perfect. Thanks, Jake.
Great.
Thank you, Justin.
Thank you.